Now we'll take a look at E9-12, which is an example about a notes receivable. Again, if you haven't tried this on your own, please do that first and then come back to this video. Okay, the question says, on September 30th, 2019, Team Bank loaned $94,000 to Kendall Warner on a 1-year 6% note. Team's fiscal year end is December 31st. We need to first journalize all of the entries for Team Bank related to the note for 2019 and 2020. So we're going to assume that they record their adjusting entries annually. So there's going to be 3 entries here. The first one is actually recording that the loan was lent out on September 30th. So that will be the first entry. And then since their year end is December 31st, we need to record the accrual of interest from September 30th up to that point. And then for 2020, we'll actually record the collection. So on September 30th, 2020, that's 1 year after the loan was made. So that will be the date we record the collection. Okay, so on September 30th, 2019, they loaned Kendall Warner this money. So if it was done through a loan, that means we gave this person cash. So we will debit our note receivable, and we've noted here it's to Kendall Warner, and we're crediting cash because we loaned them that amount. Okay, next we have the accrual of interest on December 31st. Now, how many months do we need to record for interest here? Because remember, we can't just times by that 6%. That's the annual rate. So we need to prorate for time. And from September 30th to December 31st, we've got October, November, and December. So 3 months of interest. And when we accrue this, we want to put the interest in its own account. So we debit interest receivable. It's important enough that it gets its own account. We don't just add it to the note receivable. We keep them separate. And we're crediting interest revenue. And this $1,410 comes from our principal amount of $94,000 times the 6% interest rate, and we're timesing by 3 out of 12 months because that's how many months have gone by. Okay, so that's the accrual. Now the next transaction that will happen will be in 2020, and it's at our maturity date. And since it's a 1-year note, as we said, it will mature and be collected on September 30th, 2020. So when we go to record this, we can't forget that we've already booked 3 months of interest. So we will see our collection here. We know we're going to receive cash, and we have already booked this interest receivable above. So we need to get rid of a portion of that, or we need to clear that, I should say. But then we also have the remaining 9 months of interest revenue that we need to book. So we can basically start by filling in what we know. We know that this interest receivable needs to be removed. So to do that, we will credit $1,410. The note receivable was our original amount that we set up. So we clear out the $94,000. But now we need to calculate the additional interest revenue. So we take our principal, the amount loaned, times the 6% interest rate. But now we have from January 1st to September 30th. So 9 out of 12 months that we need to book here. If you do that math, you get $4,230. So that's the additional interest. And then to get the cash, we just add all of these up. So the total of those ends up being $99,640. So September 30th, that would be the cash that we have. We've already booked a portion of the interest, so we just book the remaining 9 months and then get rid of our 2 receivables. Okay. Part 2 of the question says which party has a note receivable, note payable, interest revenue, and interest expense. So the note receivable, well, that's Team Bank. This is who recorded the note receivable. They're the ones that lent the money, so they are the ones that have that note receivable. Who has the note payable? That's Kendall Warner. He or she borrowed the money and therefore has this same amount, but it's sitting as a note payable on their records. Interest revenue, we know that Team Bank recorded that. And then interest expense, that would be Kendall Warner. So this part of the question is just getting you to think about both sides of this transaction. So we'll see in chapter, well, it's in Accounting 103 if you're taking that. When we get to the liabilities section, we'll look at accounting for notes payable. And you'll see that it's going to be the same type of calculations. We'll just be looking at the opposite side. So we would have a note payable as a credit and we would have got cash. We'd be booking interest expense as a debit and then interest payable. So the same idea, it's just looking at the other side of the transaction. Okay, now part 3 here says, suppose that Kendall Warner defaulted on the note. So if you default, it means it's a dishonored note receivable. What would the entry be for team to record for this dishonored note? So it's saying, instead of this entry that we did on September 30th here, where we got cash, how would we record this if we weren't able to collect because Kendall defaulted? So when we have this, we still will have the exact same 3 accounts that are credited because on December 31st, we would have accrued this interest. We've still got the note sitting there. So we need to clear those out and still book this additional 9 months of revenue. But instead of our debit to cash, we are just moving all of these amounts that were owed into accounts receivable. So the entry under default or the dishonored note would be shown as this. We have debit accounts receivable for Kendall Warner, and then we put the full amount there, and our credits are the same as we saw in the previous entry when we actually collected it. Moving this to accounts receivable just alerts us or reminds us that we now need to try and collect this amount because it's become due, the maturity's passed, and we haven't been able to collect it from Kendall Warner yet. Okay, so that is your final example here. We'll have some more in our live class. So if you're doing this ahead, you'll see some more there. If you're doing it after, you could look back to the live if you weren't able to attend, or go through your MyLab assignment now, or find some additional practice on MyLab as well. Okay, good luck.